Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning pre-market webcast. Okay, daily chart, then we'll look at the hourly. You can see the bands are still tight. Hyper-technically, we're on a band ride. Touched it here, touched it here. The last couple of days, the bulls have maintained their advantage above the blue line, which is the 9-day simple moving average, and the green line, which is your daily mid-band or the 20-day simple moving average. Those have come together pretty nicely. And if the bulls can press their advantage, there's a band ride waiting for them to the upside. That would certainly lead to new highs next week. So what do the bears need to do to keep that from happening? Well, what they need to do is to follow through on the morning that they had yesterday. So we come out yesterday morning and we do a nice looking little move down here. Down to the 2373s, but the middle of the day here got sloppy. Middle of the day gets sloppy. Turn this into a 15-minute chart. So bears get the move they need. At this point, the market was trend down, okay? And all the bears had to do for me was maintain a proprietary moving average that we use and really kind of keep the 5-minute mid-band on their side, and they could keep making lower lows and you could get a directional move and they could go down and attempt to take out the 9-day simple moving average in the daily mid-band. Did the bears get that done? Of course they don't. Why? Because they're the bears. So we get a bounce here, we get a very sloppy midday, and then we get another push down that creates a marginal lower low, but effectively it's a double bottom. The problem with it is down at 2372, you've got the pre-FOMC price. And if the bears can't take out the pre-FOMC price, then this whole move up and this whole move back establishes the pre-FOMC price as a floor. You establish the pre-FOMC price as a floor, especially with the daily midband and the 9-day simple moving average underneath it, so effectively 70 to 73, if that's a floor, then that's going to lead to follow through to the upside, plain and simple. So what do the bears need to do? They need to take out this entire area from 70 to 73 and convert it to resistance. And if they kill the weekly pivot along the way today, even better. If they can't, if everybody just kind of holds serve and we chop around a little bit and we close somewhere in the mid to low 70s, anywhere in the 70s, then it's going to make Sunday night into Monday even more important. You're going to see the weekly pivot as something that's going to have to be converted again. Every week we fight over the weekly pivot. Next week will be no different. So as you head into today, don't overtrade. I overtraded yesterday. I took like 16 trades yesterday. It was crazy. Don't overtrade, respect risk, protect your week. I'm all about protecting my week today. Watch this daily pivot, okay? Watch this daily pivot, 80.58. If it gets over the top, they can make a run at this 88.75 from yesterday. What do the bears need? We just talked about that. Below 73, ideally below 70. Close below something that matters, bears. If you want this tape, close below something that matters. These two lines, they matter. All right. Everybody have a fantastic day, a fantastic weekend. I will catch you guys with the midday update. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.